Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Monday, February 13th, 5 o'clock Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend. Let's hope CPI tomorrow morning doesn't interfere with that. Check over here at the trend gauge. The sub-hour arrows for leadership, short term and medium term, have flipped from yellow back to stable. So we're showing bullish slash uptrend for market leaders, and also now two closes for all the indexes back above the 21-day and 50-day moving average. That's our short term and medium term indicators. Long term, really getting close on the S&P to turning the slope to mildly positive, just less than 25 cents today. The S&P 500 slope dropped. So we keep up booking gains. That'll flatten out, eventually turn up and provide more support and confidence for this rally. IWM and mid caps basically flat, up maybe slightly. Dow Jones kind of the same. Q's getting closer, but still has a little bit of work to do. That's what we need, is continued strength and the slopes of these lines to turn from flat to turning higher to provide support on pullback. So what happened today? Broad rally. Stronger certainly than I expected after the action last week, where we lost a key level at 4,100, but we held the next level down 40.50 and recaptured 4,100 today. So broad rally. Again, CPI tomorrow morning, key inflation data will go a long way toward whether or not this continues, or we continue the pause. Really, we're just back to the top of the bull flag that I referenced in Friday's video. So here are the numbers. G6, this is our growth proxy. Indexes, average gain 1.4% today. S&P 500 up 1.14, NASDAQ up 1.16, Dow up 1.1, mid caps up 1.2, small cap Russell up 1.2, global 60/40 up 0.75, in-house up 0.9%. We'll show the tail of the tape, won't go through it in detail. We're trying to streamline these videos, make them more manageable for digestion Monday through Thursday. And then we will go through a focus list, which is 10 recent earnings winners, and we'll see where they stand on their charts. So let's get right into it. We'll start with the Dow, or not the Dow, we'll start with the S&P 500 here. Go to a 60-minute chart, and you'll be able to see the loss of 4,100 on Friday, and recapture of it today. You can see 4,100 was resistance here. We broke above it here on February 1st, pulled back, tested it several days, failed, finally broke down through it, actually at the close Thursday and Friday. But Friday put in a bottom, followed through to the upside today, back above 4,100. We'll see what comes tomorrow. Friday also with a nice bounce off the 21-day moving average. All five of the indexes, in fact, did that. So that quelled their pullbacks for the time being, and a hook up on the stochastic brings us to a neutral position on stochastic, which is certainly better than free falling down after being overbought. Next up, NASDAQ 100. Didn't quite get to the 21, and the reason for that is the recent strength it's been showing. Did regain the 8 EMA. Relative strength flagging a little bit after this being the leading index for the beginning of the year. But again, you can see the bull flag, lower highs and lower lows off of the high that was made on February 2nd. Same, I didn't point that out, but let's show it again for the S&P 500. It's really the same situation. Let's bring our line pen in, and you can see this is what we're talking about with a bull flag. There's the upper range, there's the lower range, there's the flag pull. Want to see a clean break out of there would be a continuation of this uptrend. That would be what we're looking for. Let's go to the Dow. Continues to just work sideways in a tight range. but two closes back above after one last Thursday, closed below the 21 50-day moving average, acting as support back above it today. Want to see the Dow break above there. It's been showing relative strength over the last week and a half after lagging for most of 2023. Let's go to mid caps. See the same bull flag. Really, the bull flag is on all of the indexes with the exception, we'll go to small caps now, with the exception of the Dow, which has been going sideways, a little bit of a steeper flag on small caps as they really lagged badly last week. Let's go to the VIX, which had been below this 21-day moving average for quite a while. Still closing at the bottom of the range, which is good, coincides with the market closing at the top of its range, and three pokes of its head above the declining 50-day, but closing below it. We prefer it to be below the 21, but that's turning up now. Rubber's going to meet the road tomorrow on this, along with the indexes when we see the reaction to CPI. We got markets definitely benefit from the dollar today. Take a look at a 5-minute chart here. Gapped up slightly on the dollar, and then it just lower lows and lower highs all week for the or all day for the dollar, which is good because that corresponds directly opposite to what was happening in stocks. As you can see, the higher lows and higher highs all day with a cup and handle into the close. So the dollar contrarian indicator of what's going on with the S&P, that inverse correlation continues to be strong. Let's flip to bonds now. We'll start off with TLT, proxy for long-term bonds, and it was up today. Bond prices up means bond yields down. Taking a little bit of a break after a strong run in yields last week. A little bit of a pop up on corporate bonds. Junk bonds, same situation. And the broad bond index BND, inside day, but up. So let's show the yields. Here's the 30 TYX. You can see the strong move up 6 days in yields after the employment report of 2 Fridays ago. Inside day today, taking a rest, waiting for some direction tomorrow from the CPI data. CPI data, a little bit of a wild card because they've changed the way they're calculating it for this release of the data and going forward, and not really sure how that's going to impact. The Cleveland Fed puts data out. Their expectation for CPI is a positive 0.65. The quote unquote experts are predicting 0.4%. We'll see how it comes in, and then even more importantly, we'll see what the reaction to how it comes in is. So gold on the day down, even though the dollar was down. So gold continues to not perform well, making a lower low despite the dollar being down. This big gap down on gold on the, well, hold on, let's get our price track back here. Here's gold stocks continue to trend lower also after the gap down on February 3rd. Again, that was the jobs report day. Gold and gold stocks not getting it done since then. Silver down again today also. So just continuing to trend lower. That trade looks broken for the time being. Let's take a quick look at Bitcoin, BITO. Bitcoin tight. Let's look at it on a 60-minute chart as it is giving back some of these multiple gaps that it had going back to mid-January. For now, this continuing to show risk off, even though the market was up today. So a little bit of this was pulling back while the market was pulling back, but market showed more strength than Bitcoin certainly did today. So those are the major indexes that we track. Let's go to the tail of the tape. You can pause this and read this down. The weirdest thing I've ever typed: 3 UFOs shot down over the past week. What is going on in this world now? Um, I can't even begin. to tell you. Usually it means it's trying to be a distraction from something else. Uh, you can see the VIX numbers, fear and greed, Tuesday morning CPI, expectations neutral coming in, positive with us being back above 4101, recapturing support resistance and resistance levels on the S&P and the Qs. Here is our focus list, going to be 10 stocks that recently gapped or had positive reactions to earnings. You can see what we own. We upped our exposure a little bit today by selling SARK. That's the inverse Cathie Wood ARK, as ARK reclaimed its 21-day moving average. Bottom line for today, broad rally to the top of the bull flag range, CPI tomorrow morning. Let's get to the focus list of stocks here, and we'll start off with 10 recent winners on earnings. Microchip, see the big move up, consolidating the gains. These are an absolute proxy for the health of the market entirely during 2022. Whenever we would see an earnings gap, we would just basically go no further. So we've seen continued progress. Now we've seen consolidation over the last week or so, and then a little break below on Friday, which corresponded with, for now, the bottom that we've put in on the indexes, and a move up today. These are very much a proxy when you have gaps up on earnings with good fundamentals, breaking out of bases. Uh, this is what feeds market leadership and takes the indexes higher. Always looking for new leaderships. Next up, NEWR had a gap up last week, relaxed for 2 days along with the market, back into the range of the gap up today. Again, good fundamentals on that one. American Express, people are traveling. They're paying with their American Express card, and AXP, after a nice gap up on earnings, continues to make higher highs. ACLS, an absolute standout leader. Uh, Very often when you see a big run like this, you see some profit taking on earnings. Not a chance of that with ACLS. Good day up on earnings, inside day, follow through strength today. Very clearly a market leader, would like it to be a little bit more liquid, but I don't get to decide that. The market does. Dexcom gapped up, not gapped up, but ran up, mild gap, and then mostly a run up. Digested that today. That was a Friday move on Dexcom, Fortinet, FTNT. Cybersecurity stocks really lacking leadership. This one's trying to take the baton and lead 2 days down back into the range of the gap. We like to see that. A lot of these are very high on our watch list. As we're looking, we're to the point now where we're in sync with the indexes from a risk standpoint, and we're using the individual names to provide alpha. We're just waiting for those names to make themselves known and get in at good entry points. Dynatrace was a strong leader after earnings, making a higher high on the 5th day, and then that secondary that they had completely derailed it. You can see we've got some alerts set. Want to see this get back above the ADMA and back above the high of the gap down day on 2/8 to see if it can reclaim the demand that was there immediately after earnings. Mobileye, another one acting fantastic on its earnings report. 2 tight days afterwards, and then we just took off to the upside. Even last week, like Thursday, Friday, when we were consolidating, it made a higher high, then pulled back, just undercut the ADMA and reclaimed it today. That one's looking pretty darn well. AYX, old software leader, trying to reclaim its leadership. Big gap up and then reversal on Friday, in sync with the market, but reclaimed most of those losses today, up 8.5% on 181% above average volume. So good reaction, very nice cup shaped there. Like to put a handle in and then a breakout back above there. Net, another one trying to reclaim the leadership baton. Uh, Gapped up a week and a half ago with the rest of the market, consolidated since then, was up almost 20% on earnings, gave it all back, regaining quite a bit of it today. Net back on our watch list. Nice volume patterns on net too, and we'll throw in one more. Elf on the shelf continues to just trudge its way higher. 1, 2, 3, 4, 5, 6, continuing to make highs 7 days, 8 days after its earnings gap up. That's just pure strength. And that's going to wrap today's video. Uh, Reminder here at Revere, we are active managers. We participate in the market when the market's acting well. We protect capital when the market is in a downtrend. That's what we spent basically all of our time doing in 2022 as the market had three legs down, protecting our clients' capital. And now we're trying to build on the gains, getting back in at a lower range than where we exited this first break of the 200-day moving average. And why do we focus on the 200-day moving average? Because that's where all the bear markets occur. Usually it's 12% down from the top till you break the 200-day moving average. The rest of this, you don't know how deep it's going to go or how long it's going to last. We went from 12% down to 27.5% down in 2022, working to get that back now. And if you're interested in this approach, reach out to me, Don at revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We worked on keeping it as much as we could last year. Now we're working on making it with the market being back in the uptrend. And then we'll just repeat the cycle, take the rally, ride it as long as ride the wave as long as the wave gives us to ride. And if it starts to give it up and we start breaking the moving averages, we'll get back out of the way. But we do know at some point a strong rally is coming down the road with leadership, and we're just waiting to get on it. And with that, I'll wrap up Monday, February 13th. This is Don Vandenbord with Revere Asset, telling it like it is. Thanks for listening and have a great day.